Hi guys, Boris Dorfman here with LBC Capital. Hope you missed me. I was traveling for about a month. I went to Russia and Ukraine, small cities, big cities, and it made me realize a couple of things, which I'm going to talk about next video. My next video is going to be an economic update, but it's more of a global economic update. So the main takeaway, being outside in Russia, they talk about China a lot. I realize they're so far behind us. Anyways, that's going to be in the next video, global economic update, and local too. So subscribe to my channel, don't miss my next video. And this video is actually about China. China is uninvestable. Okay, those people that want to invest in China, Chinese stocks, anything, listen to my take on this. People that follow me, they know I don't invest in stock market, and I haven't in 20 years. It's not good for my mental health, watching the markets, but I did jump into stock market for a small portfolio. My son was recently born, so I figure I'll buy 3 stocks, 5,000 give or take each. And I'll see if I can outperform the S&P 500. I bought other funds for him, but these are actually 3 specific stocks. I bought Apple, and I decided to hedge with a Chinese stock. I bought Alibaba. The valuation, the fundamentals were amazing, and still are, right? So I'm a fundamentalist. If I buy something, it has to be a solid company with a solid business plan, and Alibaba, it's a Chinese Amazon. Okay, so again, my reasoning was hedging American market, and we're going to see some inflation going forward, and these stocks that I bought, they're for long term. I figure my kid gets married 20 years, hopefully, maybe later from now, and I'll leave him with 3 stocks, and hopefully he'll say his daddy did good, at least in this portfolio, right? So Alibaba in China. So recently, and Alibaba, 2 of my other stocks are way up, Alibaba is down, and I'm not looking at it from the perspective, oh, it's down for the past 3 to 6 months, but the reasoning behind this. It's Chinese stocks, and China as a country started to crack down on these big companies that are listed on foreign stock exchanges through facilitator companies. Okay, so there was a precedent in China. They were cracking down on some of the companies for a while, education companies, and some companies they bankrupt and they go in as a partner. So Alibaba, I have it in my son's portfolio, right? And the company was tanking for a few months, for almost a year. Fundamentals are amazing. And all of a sudden, I see the company spikes. It goes up by 7% a day. What happened? I start reading the news, and they paid $15.5 billion. Okay, guys, I could forget it, so I wrote this down. Okay, they paid $15.5 billion to Chinese government for what? For common prosperity. This is straight out of George Orwell's 1984 book. Okay, common prosperity. Think about it. What does it mean? Okay, and not like this was pocket change for Alibaba. This is 1/3 of their cash on hand. This that they amassed over the years. So they gave 33% of what they have to Chinese government for common prosperity. Okay, if somebody knows what that is, please comment or call me. Let me know what common prosperity is. Okay, so China is uninvestable. You try to invest today, you try to diversify, but this is a gamble. You cannot invest. Keep your money here, guys. investing American, be safe. And it's not a political message that I'm trying to convey. This is a financial advice. This is common sense. And I learned it the hard way. These stocks, they may still do good, but invest local, invest in America. 20, 30, 40 years from now, your money is going to grow. China, I don't know what's going to happen to China. They may grow, but your stocks are probably going to get privatized by the government. Thank you. Subscribe down below. And my next video is about global economic update. Thank you, guys.